Looks like we're live. Yep, there we go. Participants are connecting. And so this is Mark Yusko, and I offer my welcome along with Corey Lester to our periodic, I won't say weekly, but periodic webinar series, Hedge with capital D. And, you know, people who know me know I'm prone to hyperbole. Okay, but I'm pretty excited about this one. You meet a lot of really interesting people in our line of business. I said I, had the best job in the world for the last 30 years. I get paid to talk to the smartest people in the world and look for ideas. And we kind of came across John and his firm Infinitum recently, and just have really been amazed at how much we have in common and how like-minded we are. His background story is amazing, and really, really super excited to have him on the show today. So with that, as a welcome, I will kick it over to you, Corey, to kick us off with John.
All right, thanks, Mark, and thanks, John, for being with us. And as a reminder, we record all these webinars, and we put up the replay about 1 or 2 weeks after the live recording. And we also repackage them in podcast form. So if you aren't catching us live today, hopefully you're catching the replay, as this is really going to be a fantastic conversation. In this picture here, here's having a little fun putting together the slides. And it's a unique image. So the image comes from an AI generator prompted with the words infinitum and artificial intelligence. So this is what you get. Infinitum means without end or limit. And I think that's a perfect name for John's hedge fund, which is a global opportunistic equity long short manager. They invest in a lot of sectors, but primarily the technology sector. And although hopefully he doesn't take offense to the title, they're still an emerging manager. We think that John possesses, a lot of the hallmarks of a manager that could one day be a household name and an industry leader. So really excited to have him on the program. We're going to discuss a lot of topics today, including John's background, the origins of Infinitum, and where John believes the firm and he have edge. And then most importantly, dig into one area of focus that is super exciting at the moment, super top of mind for all investors in the market. And we're really fortunate to have an expert in that respect with us today to talk about artificial intelligence. So without further ado, let's get into the webinar. And just as a reminder, we do these on about a 6-week cadence, maybe every 2-month cadence. And last time we talked about the first cut is the deepest. And along those lines, we were saying, be careful what you wish for, in terms of a rate cut. We got a big rate cut yesterday, 50 basis points, because you might actually get it. And what we meant by that is that if you look at history, usually when the Fed starts cutting rates, equity markets hiccup. We showed a lot of data for this last time. So we think that, it's not necessarily like a bullish sign, like the markets are pricing in today, that the Fed is cutting rates and cutting rates at the clip that they started cutting rates, because that usually means there's some economic weakness on the horizon. And that's usually not the best, backdrop for equity markets overall. Not saying things are going to fall apart, but I think that's a really healthy construct for long short managers like Infinitum. So if you didn't watch that webinar live, and if you haven't caught the replay yet, please do so, because I think it's really, really timely. But what we're going to talk about today to kind of frame things is the 4Ps. I mean, Mark really coined this, so let me turn it back to him to describe the 4Ps.
Well, look, I mean, the 4Ps are really simple, right? There's people, process, philosophy, and price or performance. Most investors do it, we think, exactly backwards. They focus on recent performance or the current price of an asset. And we think you should kind of go the other way. I mean, an investor's philosophy is really, really important, and their process is important. But at the end of the day, it's the people that really matter. And so we've made a habit over our 20 years to celebrate our 20th anniversary of Morgan Creek this summer. We've made it our habit of trying to find the really, most interesting, intelligent, kind of orthogonal thinkers in the world, and the people we think are the difference makers. So performance we think is a symptom, right? It's like a cough, right? You're already sick if you're coughing. Performance is what you get if you have good people, process, and philosophy.
Okay, so with that, let's segue to Infinitum. Let's pass the mic to you, John, and maybe have you walk through the four P's as it relates to Infinitum. So let's start with maybe the most important P, people. And why don't you just give listeners a little bit more detail on your background, how you became so passionate about investing, and why you decided to launch Infinitum.
Yeah, great. Yeah, thanks for having me, guys. Yeah, I'm John. I founded Infinitum in early 2019. As Corey mentioned, we're a long short TMT focused fundamental manager. Really focused on four sort of main subsectors of technology. So semis, video gaming, software, and consumer tech and marketplace. Those are our bread and butter businesses that we want to make investments in. Yeah, I mean, I fell in love with investing at kind of an early age. In fifth grade, my dad entered me into a stock market competition, and I remember, I, he hammered it into my mind that I should only invest in technology companies. So that probably started the interest in technology in terms of the investable universe. And ended up winning the stock market competition. So that was pretty cool. And my dad and I would trade as like retirement money, and just like with most investing stories, at first you make a little bit of money, you think you know everything, and then you quickly realize that this is like a hard game, and and you realize you learn those lessons by losing a lot of money. So I've made tons of mistakes, and I think that's kind of taught me a lot. Just kind of learning in the fire a little bit. And played tennis growing up all my life. Started playing when I was 3 years old, and played at a pretty high competitive level. Played D1 in college, and played some professional tournaments after. But yeah, I think going to school at Columbia, studying economics, and working at Morgan Stanley as an investor really sort of shaped my background and my investment process today as well.
Well, one of the interesting things is Julian Robertson, who was a great mentor of mine, and I was lucky because I worked at his university at North Carolina. One of his big things was finding people like yourself who were really, really good at something. And whether that was tennis or golf or wrestling, he didn't really care. He just wanted people to be really good. And you used the word really competitive at something. So I find that really interesting. I also love the fact that you use our favorite word, which is edge. People are so tired of hearing me use, hashtag edge. But explain what you mean by that and how it fits with Infinitum.
My general strategy overall, right? Like, so on a high level, I'm really trying to make concentrated and uncorrelated bets. When I'm like asymmetric bets when I'm getting paid to make those bets, right? So in other words, I want to be involved in highly asymmetric and relatively low downside investments across medium and long-term time horizons. I really try to think about the world in sort of two ranges of time periods, like 9 to 12 month, periods, like 1 year periods, and 3 to 5 year periods. So I've sort of tried to tailor my investment process to optimize those ranges while still protecting downside and, avoiding mistakes. Of course, you can't avoid all mistakes. This is a probability-based game, right? So You just try to minimize your losses when you do make a mistake. Easier said than done sometimes. But yeah, to sort of accomplish this, I really need to check off 3 boxes in order for me to, sort of have the best odds at maximizing my risk-adjusted return. So, it sort of ties into this philosophy. And first and foremost, I'm looking to protect downside and, invest with a margin of safety. I'm sure you guys have read Seth Klarman's book, Margin of Safety. It's a good one. So I'm really, but I do that by trying to buy high quality market leading sort of monopolistic companies when they're trading at very low valuations, ideally close or near to trough multiples, relative to its own historical multiple or that of its peer set or subsector comps. Yeah, that sort of provides me that valuation protection. Secondly, the second box is I'm looking for, sort of 3-to-1 upside downside asymmetry across a 1 year time horizon, and call this the why now box, as in like, why do I want to own the stock now, right? So typically I'm looking for fundamental inflections in the business. And, so I need to sort of understand the 3 to 4 key drivers and KPIs of the stock, why they're inflecting. Like, are we seeing these inflections, are these inflections durable inflections, or is this just like, a sort of blip in the business, so understanding why the inflections occurring and trying to obtain like a degree of confidence that it's a durable inflection in business momentum, right? So what I found is typically when a secular growing technology company is trading at trough valuations and the stock is down a lot, you kind of get a couple quarters to buy after seeing the initial business inflection, because the market doesn't necessarily believe that inflection is durable. So a lot of our work goes into determining whether or not, the business is undergoing a durable inflection, and that sort of ties into that 9 to 12 month, 1 year upside downside asymmetry.
Yeah.
So, durable inflections could be things like product improvements and updates that cause significant customer uptick, right? And new products being launched, go-to-market strategy being adjusted, sales force being optimized. Depending on specific subsectors, the answer could be a little different. Yeah.
Yeah, let me go back to this slide I glossed over real quick. And Mark, I'd like you to go into detail here because you really have the perspective of seeing kind of edge in the hedge fund landscape and universe over the last 3 decades, and how the game has changed really from one of access to information to analysis of information to really what John is talking about right now, synthesizing all these inputs and having a variant perception, having longer time horizon than the market in terms of taking advantage of these dislocations, and doing so with conviction and with edge that's durable and repeatable. So I think it's great perspective to kind of have this context, and you explain it great. And I think John is a modern example of how edge is playing out in practice today, but it's really changed and is continuing to change, as we'll get into later.
Absolutely.
And advent of data and all that. So
yeah, it's about to change, like you say, in a huge way. And look, we've all seen the movie Wall Street, and that's how the game was, past tense, played, right? Access to information. If you could get information ahead of others, this is pre-insider trading laws, and whether you got on your motorcycle and followed the guy around to see what plane he got on, now you can just pull all the data up in the FAA logs, or you stole the documents from the lawyer, which is totally illegal. But now the cyber criminals can hack into data. So access became less of a thing as computers became more ubiquitous and we were all connected online all the time. Then it came down to analysis. Did you have a bigger, faster machine? And then it became the battle of the machines, like who was closer to the exchange and how quickly could you process information. And even those models went out the window as everybody got models. And when not that many people had a model, the spread was actually pretty wide. But as everybody got a model, the spread got really low. And now if you bought the merger fund, mutual fund out there, you made no money for the last 5 or 6 years. So that analysis edge kind of went away. Now there's information coming at you all the time, 24/7. There's too much information. Most of it's not very valuable. So the ability to synthesize, decide what's valuable, what's not valuable, and to draw these conclusions, these variant perceptions. What's a variant perception, right? It's something that other people don't value and appreciate. But the key is you have to be right. And, I pinned tweet on Twitter kind of summarizes all the great wealth. Kind of like your dad, John, said, should only invest in technology. Well, why? Well, technology is where the greatest asymmetries are, and the greatest wealth is created by investing in innovation, which means you have to invest in something you believe in before others understand it. Well, by doing that, you're going to be mocked and ridiculed and criticized because, you're obviously wrong. You're just early. Sometimes early is the euphemism for wrong. But if you're right, if you have a variant perception and you're right, that's where the evidence. Now, I want to bring it back to tennis just for 1 second. So everyone's familiar with Charlie Ellis, tennis winning the loser's game. And the average person loses at tennis because they don't have the skill to hit winners, and they try. And so they have unforced errors. So if you're an amateur tennis player, what you should do is just boink it, donk it back across the net, and just and let the other person try to hit the winner and do the unforced error. But and so minimizing losses, right? 3 rules in investing: don't lose money, don't forget the first 2 rules. You summarize that great. That's the asymmetry of truncating the downside. But as a really good tennis player like yourself, or a professional, it's not just about donking it back. You have to possess the talent to hit the winners when circumstances warrant. So how do you identify those opportunities, those setups to hit the great cross-court winner?
Just like you said, the first and foremost, protecting downside, right? Like the way you sort of don't last in this industry is if you permanently impair capital, right? At the end of the day, I'm investing money for others, and their volatility and their risk tolerance might not be the same as like if I'm running my PA. So yeah, the way I do that is by looking for, fundamental business inflections when stocks have gone down, and identifying whether that inflection is a durable one or not, right? And that gives you, at least in the medium term, it gives you good asymmetry, right? Especially if you're buying stocks that are cheap. And then I couple that up with the third box, which is what I like to call embedded optionality within the business. So when I say embedded optionality, I sort of mean like segments of the business that are smaller pieces of the pie today. And so the market doesn't really care about it, or is not assigning any value to it, but maybe the segment is growing extraordinarily fast, and our work determines that in the next few years, this new product or segment has the potential to be a much larger piece of the pie. And if you get that right, that's like free optionality within the company, right? And if you get that right, that's sort of how you get, that multiple expansion and multi-bagger like return over a 3 to 5 year period. So I'm trying to match up, at least when I'm constructing the top 10 of the portfolio, which is where the fund is highly concentrated, right? Like 80 to 85% of the top 10, 80 to 85% of the portfolio is in the top 10. And I'm trying to match up downside protection with 1 year asymmetry of at least 3 to 1 on an upside downside basis from a base to bear case model. And then also the third thing would be embedded optionality. So looking for that multi-bagger like return and the compounder like return over 3 to 5 years, right?
Got it.
That's in essence the process.
No, and what again I love about that is this construct of deep research and deep understanding of the business. And again, back to tennis, when you watch a great tennis player, like, oh, that was easy, I could do that. Like, no, you couldn't, because that person has hit more balls in the last month than you probably hit in your whole life. And yes, they make it look easy because of that deliberate practice and your process of diving into a company, understanding all of the elements of the business. And I guess the answer to my question is the time to hit the perfect winner is when that inflection point comes, when that new opportunity that's, misunderstood or underappreciated by the masses, not valued properly by the masses, presents itself, and then you hit the overhand smash.
Yeah, no, for sure. And when you think about edge, I think, my quantitative investing edge sort of lies in my ability to understand pot odds, right? And find, I'm using a poker term, so understand pot odds and find asymmetry in a contrarian and opportunistic manner, especially in the technology sector, where most TMT funds and investors typically trade in the opposite fashion, right? They're not contrarian, they're not opportunistic, they're generally extremely momentum driven, right? And that's why you get these extreme moves on both sides, right? When tech stock becomes like a hedge fund hotel and it's heavily overowned, and growth decels, like you get these massive down moves, right? Even if you think like on the quarter it looked okay. So being opportunistic and having that a little bit of differentiation versus everyone else, or significant differentiation against most everyone else, I think is a real edge. Qualitatively, I think some of the main qualities that good investors have, and I try and incorporate into myself, are just separating emotion from reality, right? Understanding like my own biases, and putting in guardrails to prevent bias from leaking into the investment process, like being open-minded, being curious, being an independent thinker, and most importantly, sort of balancing conviction with flexibility. And I'm still pretty young, so I have to always continue trying to improve my process and not let my philosophy on investing crystallize. Like I'm a major believer in the fact that track records degrade when you stop being open-minded, right? Like track records really degrade for three reasons. You either get too big, you become lazy, you focus on the 2% side of the equation and instead of the 20. And then third is, stop being open-minded. You think you figured it out, right? And like, of course, it's important to hustle too. Like, I'm a big believer in hustling. Like, I'm hardwired as an independent thinker, and I'm willing to spend my nights and weekends figuring things out for myself and doing the work and going down the rabbit hole. So yeah, I guess
Yeah,
So
John,
yeah,
that's a great point you make about, this being, or about, this being something, where it's a continual learning process, and you get better, hopefully each and every day. And, this game of investing is one of the few games out there, unlike tennis, where as an athlete, you get better with age. Every other game, tennis in particular, as you get older, your performance starts to degrade. And, maybe sticking with the sports analogy here and maybe pivoting to AI as a theme, I think you see, and I think we agree that this is one of those opportunities where you can hit a forehand winner down the line. And the market's obviously catching up with this. There's been a lot of excitement, a lot of good returns already made. But in terms of that edge, in terms of that, we always refer to VAR, not value at risk, but value added research. You've really done a lot of value added research as it relates to AI. So let's go there and talk about the opportunity set, why you still think it's so compelling today, and really give our listeners and watchers today a good sense of the deep dive you've done into the space that gives you that edge, that conviction to continue to swing at the ball and hit those winners when everybody else is saying it's a bubble, it's a bubble. Nvidia is too expensive. Like all the easy money's been made, and maybe all the easy money has been made, but why there's still good money out there to be made in this theme.
Yeah, definitely. I mean, if you think about easy money being made on the bet on AI so far, I mean, you know, buying the picks and shovels is always, sort of the easier way, to make a bet on a large secular theme. And I mean, I continue to plan on investing in that manner. Like, I don't think I'm smart enough to figure out which application layer company is going to win. Right? Like, if you look back to like the internet time, the internet, early internet days, like, uh, a lot of those companies don't exist anymore. They're a very small percentage of the overall market today, and some got acquired and et cetera. But like the big ones that everyone thought was going to be huge don't really exist. And I'm not saying that Nvidia can't go higher, by the way. It can. I have no idea. Um, but hyperscaler demand and sovereign demand is still so high, and Nvidia is the gold standard for training. But I'm more focused on asymmetry and upside and second and third order thinking in terms of semiconductors. And in my opinion, I think the next big wave in semis will be in figuring out who the winners in inference are. So maybe you have the slide up. So yeah, maybe going into the differences
Just talk
between.
to us in layman's terms. I mean, first explain what does inference mean? So when people refer to inference in the AI space, what are they talking?
Yeah, so inference is sort of the process of using a trained machine learning model, right, to make predictions based on a new input, right? So for example, when you type a prompt into GPT, right, and you ask it a question, you are calling the model for it to give you an output. The output is the inference part of the equation, right? So there's really like kind of four sort of important things you need to understand with regards to inference. So like the workload, right? So what does inference do? So workloads include like predicting future outcomes, classifying things. Like the funny example would be like from like the show Silicon Valley, like hot dog, not hot dog. Object detection, right? Within images or video or like natural language processing. So understanding human language, translation stuff, speech to text translation, which I find pretty cool, or speech to speech translation, things like that. So the workload is important. Then you get into this concept of latency and throughput. So latency is essentially another word for speed, right? It's the time for the system to process an inference request. And throughput is the number of inference operations that you can do on a per second basis, right? So you're trying to minimize latency. So the lower the latency, the better, right? And you're trying to maximize throughput. Yeah, I think
So what are
important.
what are the companies within kind of inference as a theme within AI best positioned to capitalize on this trend, on this need, from a business standpoint?
Yeah. Well, right now, everyone's most are not 99% of people are using NVIDIA GPUs to run, sort of both training and inference operations, right? However, like GPUs are not necessarily um, the best architecture, in my opinion, to run inference on. Uh, for a variety of reasons, but like high level, GPUs tend to be less efficient and slower. And you can see that when you're running a prompt in GPT, right? The answer comes out like a typewriter, and it has to do with GPUs using off-chip high bandwidth memory and data having to travel in a bunch of different directions. And you're calling data from the model. You're moving back and forth between on chip, off chip, and that sort of operation is slow and very costly. So Yeah, there's a few companies that are working on the inference problem. There's really like I think two in the venture space amongst like AI accelerator ASICs, and one of them's Grok, which we are investors in, full disclosure, and then there's another company called Cerebras, which is also kind of they're both kind of neck and neck, and I think it's a good thing for there to be more of these types of companies, because then more hyperscalers realize the problem, and
So are the best ways to access this theme at the moment on the private side? Are there any public companies that give investors exposure to inference as a theme? I mean, it just seems like a huge exploding area of demand, having companies that can provide this inference capabilities to, all the LLMs that are being created and expanded across industry sectors and companies.
Yeah, definitely. Like AMD and NVIDIA also, are designers that, focus on the inference market. Intel bought Habana Labs, let's say like 6 years ago now. So they have AI focused chips, and then also, the hyperscalers, like hyperscalers have developed in-house silicon, right? So, Google was the first to do it with the tensor processing unit, who was the by far the leader in AI a decade ago, realized that they have a compute problem that they need to solve, because there's no business case to ship AI applications, even though they had them built, right? So, they were the original LLM, came from Google in 2015. It was the BERT model, and then ResNet was developed, and these became, the benchmarks up until recently, for like MLPerf and performance of semis that were focused on a space. So
Yeah. One of the things I think is really interesting is I've heard it described that, CPUs processed words, right? Code, and GPUs processed, to simplify it, images. Pictures worth 1,000 words, so orders of magnitude faster. But the challenge is this, training, right? I'd say if I read a book, it takes me a week. Corey reads a book, it might take him a couple hours. We get to the same point, and speed doesn't really matter. I mean, faster is better, but a week versus a couple hours doesn't really matter if once you're trained up, if you're going to have something work for a long time. But when you're making a decision, right? When I have to decide what's the next word out of my mouth, or do I walk across the street before the car comes, or, the decisions have to be really fast. And
exactly.
as I understand it, that's a three-dimensional problem. If you think about math, most of us learn, algebra and geometry, but when you get into vectors and arrays and surfaces and the math of decision making and processing literally trillions with a T of data points, you need three dimensions. And so these tensor processing units developed at Google, and as I understand it, Chamath knocks on Jonathan's door and says, "Hey, let's go start this company for the world, not just for Google." And the tensor process, moved out, and now they've expanded it even beyond that into language processors, which are specifically designed for these large language models. But every time we get an order of magnitude shift, the problem is, again, as I understand it, OpenAI and ChatGPT, every time someone prompts it, they lose money because the amount of electricity and cost and data and compute that they need to calculate to do that inference, given current dynamics, is really high. And, the old joke about Amazon, well, yeah, we lose money on every book, but we make it up on volume. It doesn't work that way, right?
Yeah, for sure. There's definitely the two most important things for inference are speed and cost, right? And just the GPUs are not architecturally efficient for what you need to optimize with inference. I mean, we kind of went into why, but we can go a little bit deeper. Like, training requires sort of parallel processing, whereas inference requires like both parallel and sequential processing, right? Like
Right.
executing tasks in order and simultaneously. So, um, and then at a continuous frequency with low latency and high throughput batch processing, right? So, because of that, GPUs also have like significant architectural disadvantages. I mean, like, the OpenAI example, if OpenAI bucketed their inference and training costs under COGS, like they would have like massively negative gross margins. Um, so
Pesky detail, pesky detail.
yeah, um, but yeah, yeah, there's certain batch sizes where GPUs are, pretty good at inference, right? Or pretty wouldn't say good, but pretty acceptable to use for
Yeah,
inference. But then you're right. Like you have things like robotics types applications. Like you can't have like a self-driving car like not run inference in milliseconds when it needs to stop at a red light. Or else there's
exactly. Yeah, those edge lack of communications don't work.
same thing with like what I think will be the first wave of sort of big wave of AI applications that will truly make a difference in terms of consumer facing AI applications.
Yeah. So Grok, okay, has this ability to create this new class of chips, TPUs and LPUs. So they should just make as many chips as they possibly can and sell them, right? But that's not what they're going to do. And I think their business model is really interesting. Maybe talk about that.
Yeah, I think John thinks, and I also think this, and a lot of people think this, that compute is the new oil, right? So essentially, they're looking at compute as oil, tokens, right, as oil, and they're trying to build a token factory, so that they can provide companies with compute at much lower costs and drive the cost of compute down, right? And that we'll go into this later, but this goes into like the open source versus closed source debate as well. And Jonathan, years ago when I was first making the investment in the company, told me like I want to take compute cost to zero. And I mean, the Grok offers the lowest cost and the lowest latency, the highest speed, right? Output speed and uh, benchmarked on like Llama 3.170 billion, right? Which is the chart you guys have up, I think, right now.
Yeah, John. So, we have a lot of charts here. We have a lot of data, and those listening can't see it. So important to articulate, what's on the screen. And maybe, as you talk about Grok and you talk about its competitive advantage versus the competition, just explain this chart. What are we looking at here?
Yeah, this is output speed, so latency, in terms of tokens per second. So the more tokens per second you're able to, compute, it makes your response time faster. And then like it's not always an apples to apples comparison. There's a little bit of confusion, I think, in the market amongst, um, you know, output speed or input output speed. You really, in order to make an apples to apples comparison, you need to look at precision in terms of quantization, and you need to look at context length. So precision and quantization um, refers to the floating point operations right? The number of floating point operation in bits. So, the standard benchmarks are 32-bit input and a 16 floating point, 16 FP output. And what's been happening a lot, what I've seen in the market is that a lot of companies are quantizing models down to lower bits. And when you do that, you sacrifice accuracy and model quality for latency, for higher speed. And, extreme quantization leads to just like unusable models. So you really need to benchmark these, speeds on an apples to apples basis. So are they on the same floating point? Are they on the same context length? I think that's really important in order to make it apples to apples comparison. Yeah.
Okay. So let's maybe pivot. There's a lot of themes to get to within AI that I know you wanted to focus on. We were talking in our pre-webinar, but maybe going to the open source versus closed source point you were making. Just walk us through some of this information you sent over. And there's a couple of different slides here. So maybe tell me which one is the best to start with, and we can take a slightly deeper dive into that sub-theme within AI.
Yeah, I mean, we could start with the first slide, right? Open source performance lagged private models by almost a year. And then Llama 3.1 405 billion parameter model came out in July, and that dramatically closed the gap. And if you go to the next slide after that, you can sort of see, the MMLU score versus other foundational models like GPT-4 and Claude 3.5. You could see Llama 3.1 405B outperforming across a lot of these things like IF eval, some math, and
I would say, I mean, so Llama is the one from Meta, correct?
yeah, that's right.
And I've noticed recently they're starting to include this in a lot of their apps like Instagram and WhatsApp in particular. And I've played around with it in WhatsApp. And I've been really amazed with one, the speed of the responses to queries, and two, the quality of response. And I've started to use it to, do basic tasks like, for example, I'm going on a trip with my mom to Paris in like a month. And you type in prompts like, what should you do with your mom on a trip in Paris? And it gives you great ideas. And then from within that, it's like, okay, like obviously take a boat tour on the Seine. That's pretty obvious. Then you ask which boat tour is the best, and it gives you really good facts and information about those tours, and also makes it easy to access the actual booking page to complete the thought and the task. So I guess the question is that the Llama LLM that you're referring to here that people can use on a real-time basis now through WhatsApp?
Yeah, not only can you use it for free, but you can if you wanted to, you can build applications on top of it. So Llama's open source, Facebook open source, their foundational model. They were the first to do so. And basically you can access all the underlying code, the data, the models, the tools, the libraries, the software, and the source code is publicly available. So yeah, anyone can like modify it, distribute it, contribute to the code. And I think that's very important. Like I strongly believe for AI that not only do I believe that open source will win, but I believe that it needs to win in order to prevent a dystopian society, right? Where too much power is concentrated into the hand of one company or one.
Yeah. Good point. And if you haven't tried it, and Mark, if you haven't tried it either, go try Llama and compare it to ChatGPT. I've just been blown away recently with the quality of the interaction with Llama through WhatsApp. And what's even more interesting about it is you can access it. Well, I think you need an internet connection, but no, for example, on an airplane, you can just access it without buying the airplane Wi-Fi. You can just access it through the general text messaging feature that, airplanes offer everyone. And you can even play games with Llama. And it's like fun, like memory games. It's like things that like actually entertain you. And I spent an entire 3-hour flight just interacting with Llama as my form of like entertainment during the trip. It was quite amazing. Check it out if you haven't tried it out. And I'd be interested in anybody's feedback. Yours specifically, Mark, because I think you've maybe used ChatGPT more than
No,
Llama.
no, I think it's great. And
Comparing and contrasting the two.
yeah, I'm on it. And one of my biggest complaints about ChatGPT is hallucinations and the amount of incorrect data that it spits back. And I'll give you an example. So, we make a number of investments at Morgan Creek Digital in the digital network space, and that includes AI, blockchain, chips, and data. And anything that intersects more than one or two of those is even more interesting. So chips for AI, like Grok, part of our portfolio. Long story short, we were working on another chip company, and I was sitting with one of their founders yesterday, and we needed someone to kind of review something in the design to try to make the next leap. And we said, all right, let's ask ChatGPT, who is the world's foremost expert in chip design? And, it came back with the first two answers were solid. I mean, they happen to be Chinese technology people, and those were solid answers. But the third one, the guy said, I know that guy. No way is he, world's, foremost expert. No way. So, and it reminded me of, in the old days, you'd read the Wall Street Journal and you'd know something about a topic. You can say, oh, that's wrong, that's wrong, that's wrong. But then you'd go to the next column where you had no knowledge and you'd read it. Oh, and you'd highlight it and you'd cut it out and you'd send it to all your friends like it was expert. And someone else is going, well, that's wrong, that's wrong, that's wrong. So I love to hear the fact that this higher output model fueled by Grok chips is doing less hallucination, fewer errors, better speed, less latency. And at the end of the day, what's exciting about all of this is most of what we're talking about is not inventing new things. It's making things that seem super logical. Like we've all tapped on buying a plane ticket. So now our phone knows where we're headed. And even without being prompt in the future, it will suggest ideas, and it may notice that you've been sending your mom emails and say, hey, you're going with your mom. Why don't you, go to this museum that, is her favorite in terms of, because then it'll know. So in some ways it's kind of intrusive maybe, but all that information is out there. And the example that it happened almost 3 or 4 years ago and it hasn't happened since, but I got a message from my phone saying, hey, last year on this date, you ordered flowers from Purple Puddle for your wife. Do you want to do that again? And it was assuming it was my anniversary or her birthday, and it was correct. Hasn't happened since. I actually kind of like that feature. That was because I didn't have to remember, but.
Yeah, so I think the goal longer term is to make everybody's lives a little bit easier, enhance productivity across the board, not just on the pleasure and personal side in terms of like booking trips and helping craft itineraries, but for companies that install this into the workflow. And, we have so much to talk about. There's never enough time. Love the point about open source over closed source. That seems very obvious. Love the insight into inference versus training, two huge themes there with just, boundless investment opportunities to take advantage of. And I think John and Infinitum are a great way to learn more about the space, access some of those investment opportunities. We'll be talking to John a lot more in the future. Like we said, he's just getting started, an emerging manager now, but quickly becoming a very established manager and, thought leader in the space. And to maybe wrap things up here, Mark, would love you to walk John through one of your famous lightning rounds, just to
Absolutely. All right,
make it
John.
a little bit more
Uh,
casual here.
Softball questions, short or long answers, however you like. So what is the personality characteristic that you think makes a great investor?
Balancing humility, with conviction. I think that's the most important thing.
Love it. Absolutely love it. So when did you heed your dad's advice and kind of see the light that technology was where you wanted to spend the rest of your career?
Um, yeah, I think pretty quick. I mean, my dad's my hero, so I listened to him. I never really went against what he said. I looked up to him so much, so pretty quickly, and um, yeah, I like that both investing and technology can intersect it. And I think any investor should invest in, companies that they're passionate about and that they enjoy researching. I think that's an important part of the process. Yeah.
Yep. What is it about AI that, I call it the 79-year overnight success story? But after 79 years since the term was coined, and I'm old enough to remember that 1980 was the year of AI by Time Magazine. And in 2000, Intel stock went up 20-fold in 1 year because their chip was going to revolutionize AI. Now it's down 60% since then. But what is it about AI that makes it the investment right now?
Yeah, so this is going to be a longer answer.
Yeah.
Um, so I think the first wave of truly difference-making consumer-facing AI applications will be these sort of like what they call agentic solutions, right? Or AI agents, which is kind of another way to say chatbots that aren't dumb, and actually useful. So, and then that's like an inference problem, right? These are like conversational bots that require low latency and low cost. So, um, well, like let's say you have a problem with your travel, right, today, and you need to call Delta or American Airlines. You're going to be on hold for like an hour, right? And that's before you get to someone who doesn't really do anything to help you, or bounces you around um, to other departments. Now imagine when you call a customer service line, someone picks up the phone immediately, and the person you are speaking to on the other line is trained on all the relevant data and can find you a solution like pretty much immediately, right? By the way, all of that happens and you believe that you're talking to another human being when in reality you're talking to an AI, right?
Mhm.
I think that will be the biggest impact. Things like that will be the biggest impact from the first wave of applications. And I like to call it the GNA wave, because, like, well, the numbers are like bewildering. Like the average S&P 500 company, right? These are the 500 most efficient companies in the world. The average company spends around 20% of their revenues on G&A expenses.
Wow.
That doesn't include sales and marketing, just general and administrative, which are back office functions like HR, accounting, finance, legal, call centers. So I mean, that's what's really exciting. I think AI is going to be able to cut this cost in half, right? And that's going to be extremely accretive to bottom lines and change a lot of things, right? So that's something I'm excited for. And then, the next wave after that, where inference becomes even more important and computationally intensive, are like robotics and self-driving cars. Still I think a little bit further away, but you can kind of see the reality of these applications being shipped in the near future now, right? As long
Yeah.
as scaling laws hold up, I think things just get pretty interesting over the next 5 to 10 years. And um, I don't know if that answers the question,
No,
but
it's a great answer. And look, I think the trend is clear. They say that each of us has kind of 20 to 30 chips that we interact with on a daily basis. and not that long out in the future, it'll be, close to 1,000, which seems incomprehensible, but there'll be chips everywhere, and they'll all be driven by these AI systems that'll be a little bit different than the way we think about just a chatbot. All right. So where do you look for inspiration for investment ideas?
Where do I look for inspiration for investment ideas? Just talk to people like in the industry, in the technology industry, founders. I love hearing like founder stories and, listen to how people build companies. Oftentimes like the best ideas come to me when I'm just like taking a walk, right? And
Yeah.
I'm thinking about things and I have, I'm away from screens and I have a little bit of time to just like relax. So yeah.
It's like your background picture. The trees have infinite wisdom to share. So we need to spend more time in the trees. All right. So what do you read on a consistent basis that you couldn't live without?
Probably yeah, I like Twitter, reading stuff on Twitter. I like Bloomberg. I like reading articles on Bloomberg on my phone. Uh, yeah, those are probably the two biggest news
Yep.
sources, honestly.
Awesome. What do you do for fun?
I like to play poker,
Nice.
play online poker a lot. Played for a long time. It's very, I like probability-based games that are highly competitive. It scratches that itch for me. That tennis.
All right. So what's your one tip for all the amateur poker players that would make them better?
Yeah, read a few books before going into a casino. Read like Doyle Brunson's book, or start out like you don't need to like be calling every hand, right? Poker pros like fold 90% of their hands.
Okay.
So,
That sounds like the one tip. Fold 90% of the time. I like it.
yeah.
All right. What's your favorite spot to eat? Like secret spot?
I like Ivan Ramen and Lower East Side in New York.
Awesome. Awesome. All right. Where do you go to escape when you need to recharge the batteries?
Good question. My home office. All
right.
I go play with my daughter. I have a 3.5-year-old daughter. I like to take her out for ice cream and take her to the park. Yeah.
Love it. All right. If you could have dinner with anyone, living or in the past, who would it be and why?
Probably Warren Buffett. I mean, I think what's the going rate now? It's like a few million.
That's a big number. All right, cool. All right, last one. What's the most impactful book you've ever read?
I think probably two. Investing book would be 100 Baggers.
Nice.
And then more philosophy book would be the Book of Five Rings by Miyamoto Musashi.
Love both of those. I know what I'm gonna be doing this weekend. All right. Well, John, such a pleasure. So we'll have to do it again because there's so many other areas of technology and investing that we could talk about. We are grateful for the relationship. We look forward to doing more things together, and we'll be back together and looking at some incredible opportunities in the future.
Awesome. Yeah. Thanks guys for having me. Appreciate it.
Yeah, John, thank you for your time today. Thank you for everybody for participating. And I know the slide here says, are there any questions or comments? We just frankly don't have time for it today. But please, if you have any questions, if you have any comments, get in touch with me. You can see the email address here. I can funnel those to Mark or John, and we'd love to continue the conversation. John, thank you very much, and we will have you back on soon.
All right.
Thanks, guys.
Take care.
Thanks. Talk to you soon.